we have to move to the solution of this video. So first account what we have to prepare, we should write the name of the account, that is realization account. Realization account. Next we have to draw the columns for realization account. Let's we have to draw the columns for realization account only. So first debit side, particulars, amount. Again come to the credit side, particulars, amount, credit side. While preparing the realization account, we follow according to steps only. In the first question we follow the steps. If the information is available, means that step we have to consider. If information is not given related to those steps, means we have to ignore the steps and we have to move to the next step only. If the information is available, information is given, means we have to consider that one. So let's come to step number 1. What they are given in the realization account: to realizable assets at book value. Realizable assets at book value, that means what the asset the company will have which they are ready to sell, that we have to record it in our book value. On step number 1, and then inside we will write here only to realizable assets at book value. We have to underline this one. So here which are the assets we have to record it? Except cash in hand, except cash at bank, and except profit and loss account. If anything is given in the balance sheet, means except these three things, remaining all assets we have to record it through their inner column values itself. Okay, so original value we have to record it. For this, first we have to record it to bills receivable. Bills receivable. We should write directly to the amount column itself. The value of bills receivable is 10,000 is available, so we have to write 10,000 as usually. Next, second point is debtors to debtors. Here debtors two values they are given. Inner column value is there, outer column value is there. Here when we recorded the assets and book value, we should consider. So 45,000 the inner column value what they are given, that will be considered as a book value. After that, stock to stock 10,000. To stock 10,000. To investment. So the stock is 30,000 not 10,000. To investment 10,000. Investment 10,000. After that, furniture to furniture 15,000. To furniture 15,000. To machinery 25,000. To buildings to buildings. The value they are given 63,000. To building 63,000. To motor car 18,000. One, two, three, four, five, six, seven, eight. 8 assets are there. 8 assets original value we have to record it. These assets are ready to sale. This will be recorded under step number 1. Step number 2. We have to note in the credit side by realizable liabilities. Liabilities at book value. Book value. So look at how many liabilities are there in the balance sheet. 2 liabilities are there. One is creditors and bills payable only. So before that, we have to record it debtors in the inner column value and the PBD what they are given, that will be considered as a PBD, will be considered as a liability. Value is 3,000. After that, by creditors, by bills payable, by bills payable. So the value of creditors is 50,000 and bills payable is 10,000. This is step number 1 and step number 2, which the information available in previous balance sheet. So these are the information which is available in our previous balance sheet where we have to record it. Let's come to the step number 3. Always step number 3 will come to credit side. We will write by bank account in bracket assets realized. We have to record it assets realized. That means assets sold. Realized is nothing but assets sold they are given. So we have to write what the information is available here. So which of the assets we are going to say? So number 1, by bills receivable. We should write the value in the inner column rupees 9,000. By debtors. So the value we have to write 43,000. Debtors 43,000. After that, stock. The value of stock they are given 25,000. After that, by machinery. The value of machinery is 24,000. After that, by buildings. Building value is 60,000. After that, by motor car. The value of motor car they are given 15,000. By furniture. 13,000. Next, by investment. 14,000. These are the assets they are given. How many assets are realized and are sold? 1, 2, 3, 4, 5, 6, 7, 8. All the assets they are going to be realized, they are sold. Sometimes here book value all assets we are recorded. When the company is ready to sell, One of the assets they are not recorded here. For example, bills receivable, they are not recorded in the adjustment number 1 or any other adjustments. During that time, book value is available, adjustment is not available. So, we have to record same value under step number 3. When is if they are avoided, omitted to record, if happens, only that we have to consider. But intangible assets, it will be recorded and will be not there, means no need to write, like goodwill. Goodwill is given in the balance sheet, but in the adjustment they are not given, means no need to consider. Whether they are given both adjustment as well as the balance sheet, then we have to consider. Apart from that, any tangible asset, they are omitted to record, they are confused to record, they are left to record, means during that time the original value that we are given, then we have to record it under step number 3. If it is given, no problem. It is not given, then we have to consider. If it is taken over, no need to write here. We will write separately under different steps we have to follow. Now, make the total of all 8 assets, means we have to get 2,03,000. 2,03,000. The total value of assets what we have to get? 2,03,000. We will take the same value here to cash or bank account. 2,03,000. How this value we have to get? By making the total of all the 8 assets, we will get the value is 2,03,000. This is step number 3. Step number 4, what will be says? Payment of liabilities. How we are going to pay? Through bank basis we are going to be paid. What the assets we have to sell, we did receive the hard cash. We have received through bank only. What the value we are going to receive now? 2,03,000. Out of that, we have to make some payments. Some deductions will be there. That is compulsory payment of liabilities. We will write under debit side of realization account. Step number 4. 2. Bank account. In bracket we have to write liabilities. Liabilities paid. Liabilities paid. So liabilities details where it is available under adjustment number 2 they are given. Creditors and bills payable paid off at a discount of 5%. They are given. They are paying at a discount of 5%. So they are paying at a discount of 5%. The book value is how much? 100%. Out of that 100, they are not paying how many percentage? 5%. Then what is the percentage we are going to pay? 95% we have to pay. 95% is how much? Then we have to consider here. So here we should underline this one. Which are the liabilities are there? Creditors, bills payable. First we have to write here creditors. In bracket 50,000 into 95%. 50,000 into 95%, 47,500 is there. Bills payable value is 10,000 into 95%. So 95% means 9,500 we have to get. Are you got it? How the 95% we get means book value is 100%. In that 5% is a discount. Then what is the present value? 95%. The 95% means how much? 9,500. By adding these two, we will get 57,000. 57,000. So we have an income of 2,03,000, but we have to pay the payment is 57,000. This compulsory pay. This is step number 4. Step number 5. Any assets taken over this, we will write in the credit side of our realization account. All 8 assets are there, we have sold. No one will taken over. That means step number 5 will not come. Step number 6. Any liabilities taken over. So here we have only 2 liabilities that we are paid here. That means no one will taken over the liabilities. So step number 6 also no need to write. Step number 7, dissolution expenses paid. So here who is going to pay? Adjustment number 3 will says that dissolution expenses amounted to rupees 4,000 they are given. Amounted is nothing but company has paid the expenses. So if any expenses, it means always expenses come under debit side of realization account in the heading to bank account. In bracket, dissolution expenses. Underline this one. So under that, dissolution expenses rupees 4,000. Rupees 4,000 here. So all the 3 adjustments we have to transfer here. Now it's time to close the account. In this chapter, making the total is difficult. Sometimes maybe get the profit, sometimes we get the losses, sometimes credit side we have to get the highest value, sometimes debit side we have to get the highest value. But in this concept, in this question, the debit side only we have a highest value, that is 2,77,000 we have to get under debit side total. While making all the totals, 2,77,000. Same value we should write here, 2,77,000. Out of this 2,77,000, deduct all the income, we will get the difference. The difference will be considered as a loss. So the loss is 11,000. So we will write by partners capital account in bracket loss. We have to write clearly loss. What we have to do? This loss we have to distribute it between the partners. What are partners here? Pallavi, Tanvi. So what is the loss? 11,000 into 1 by 2. 11,000 into 1 by 2. Therefore 5,500, 5,500. So like this we have to prepare realization account under dissolution of partnership firm. So first account, what is that? So realization account we have to complete the process. Let's come to the second account we have to prepare, that is partners capital account. We will draw the columns for partners capital accounts. So first draw the columns and write down the heading partners capital account. Partners capital account. Partners capital account. First partner Pallavi, second partner Tanvi. Again credit side particulars. Pallavi. Tanvi. Particulars amount, Pallavi, Tanvi. So here the details they are given. What is that means? The partners related transactions they are given. So while preparing the partners capital account, we have followed some steps. Steps number 1, always opening balance we have to record it. Where the opening balance is available? Opening balance is always available in the previous balance sheet under the heading capitals. Here also we have to write by balance brought down. The capitals they are given. Pallavi's capitals is 60,000. Tanvi's capital is 80,000. First, we have to transfer the transaction from the balance sheet. Later, we have to come to the adjustment. Later, we have to come to the next account. In the same balance sheet, under liability side, one more heading they are given. What is that they are given? So they are given reserve fund. The value of reserve fund also is they are given in the balance sheet. So which side it is reserve fund is there? Left hand side of balance sheet is there. So next account which side it will come? Right hand side of the account we have to write by reserve fund. The value of reserve fund is 15,000. Ratio is 1:1, 1/2. So first partner will get 7,500. Second partner also will get 7,500. While adding these two, again we have to get the value of 15,000. Same value. If we won't get the same value, means we decided that we are distributing the wrong manner. If both the values will be added, we will get the same value. Means you can imagine we are doing the right distribution. So liability side transaction is completed. Let's come to the asset side of previous balance sheet. One transaction we have to left to record here, which is the transaction profit and loss account they are given in the balance sheet. The value of profit and loss account is 12,000 they are given. Which side they are given? Asset side. That means right hand side they are given. Now we transfer to our left hand side of that account. We will write to profit and loss account. The value is 12,000 is that we have to distribute it in the ratio of 1:1 equally. First partner will get 6,000, second partner will get again 6,000. 6,000. After that, any adjustment is there related to the partner's capital account? No adjustment they are given. Let's come to the previous account. In this entire account, somewhere we have to write to partner's capital account or by partner's capital account. So step number 1 we won't write. Number 2 we won't write. Step number 3 we didn't write. Step number 4 also we didn't write. Step number 5 is not available. Step number 6 also not available. Step number 7 we didn't write. Step number 8 we won't have. Step number 9 we wrote here by partner's capital account loss. Which side we have to get the difference? Debit side. This loss what we have to do? Distribute it to the partner's account. We have to debit the value. So here we have to write to realization account. From where this value is available? From the previous account, that is the realization. From the realization account. Therefore, we have to mention in the bracket loss. So first partner will get 5,500 is the loss. Second partner also get the 5,500 is the loss. Now we have to close the account. So before closing, just imagine which side we have a highest value. Always credit side only. Sometimes it is the chances we will get the debit side highest value. Sometimes always we will get the credit side only highest value. First part 80 plus 7,500, 87,500. Same value we recorded here 87,500. 87,500 minus this two value means we will get 76,000. Second quarter 67,500. 67,500. Out of this we deducted somewhere 67,500. We will deduct 56,000. So for this we will need to bank account. In bracket mention the capitals. Here we won't write balance carried down and balance brought down, because the company will be continued means we will write brought down. The company will close it means no need to write balance carried down. So directly we will write to bank account. In bracket we have to write capitals. Second account is also completed. Let's come to the third account, that is bank account. Bank account. For this also we have to draw the columns. Debit and credit compulsory we have to write particulars, amount, particulars, amount, particulars amount, particulars amount. In bank account, here also in the first step we have to transfer the opening balance which is available in our previous balance sheet. Okay. What is the total of bank account? They are given in the balance sheet itself. They are given the bank balance is 15,000. So which side it is available in the balance sheet? Right hand side. That is asset side is there. Now we transfer to debit side of the next account with the heading to balance brought down. Balance brought down 15,000. 15,000. First we have to transfer the opening balances. Later on we have to transfer the remaining transaction. So after transferring the balances from the balance sheet, we have to follow the previous account or adjustments. So in the adjustment number 1 it will say assets realized. The same value recorded here by bank account, assets realized. Okay. Which side is there? Credit side. Here it will comes to the next one, which side? Debit side. So what we have wrote here? Assets realized. Adjustment number 1 also says about the assets realized. Step number 3 also says about the assets realized. Which account we have recorded the value? Realization account. Same we have to write here to realization account. To realization account. In bracket we have to write assets realized. Here no need to write all the assets here. Already we should write in the inner column. We will make the total. The total is 2,03,000. The total is 2,03,000. Total is 2,03,000. So and same the adjustments we have to write. Adjustment number 2, creditors and bills payable paid. The same value we have to record it in the step number 4 to bank account. Where we have to write this value again? Bank account. What is that? Liabilities. Two concepts are there in the step number 4. Which side we have to record it? Debit side. In the next one, which side it will come? Credit side of the next one we have to write. We will write from where we have to write to get the value? By realization account. Realization account. In bracket we have to write liabilities paid. The value of liabilities paid, we will make the total, that is 57,000. 57,000. After that, one more value, and somewhere we have to write two bank account. What is that bank account details they are given? Dissolution expenses paid by whom? Company. Where we have to write debit side of which account? Realization. It will come the credit side of the next account by realization account. In bracket you have to mention dissolution expenses 4,000. After this we have to come to this next account, partners capital account. In partners capital account somewhere we have to write the term bank account. Credit side we have to write. Is it right? No. Debit side we have to write. That value comes to the credit side. Where we have to write? To partners capital account. So we will write by partners capital account. Capital account. That means first partner Pallavi 56,000. Second partner Tanvi 76,000. Two partners capital is also complete. So this account is also complete. In balance sheet, one transaction we have to left to right. So just go through the liabilities. Bills payable considered, creditors considered, reserve fund we distributed here, capitals we considered here. Which is we are going to lose? Pallavi's loan, that is a liability. That is not a liability. That will come under the heading bank account. Which side? Credit side. Why means in the previous one it is in the left hand side. Now it will come to the right hand side. So we will write by Pallavi loan. Pallavi's loan is there 25,000. Now we have to close the bank account. Both the sides we have to get the equal value. These are the properties which we have. These are the debts we have to pay. When paying these two means we will get the equal balance. So here 2,03,000 plus 15, 2,18,000. Same value we have to write here 2,18,000. By make the total of all these credit side values, we will get the same value. We won't get any differences. Like this we have to prepare the dissolution accounts. That is, one is realization account, number two is partners capital account, number three is totally cash or bank account. But in the question they are given the bank details, we will get the bank account only. So these are the accounts we are prepared in this concept. We have to discuss this one. Okay, my dear students, in my next video we have to discuss about the one more concept in the new chapter only, in this same chapter with a new adjustment. So thank you everyone.